Well, hello traders and investors. I'm L.A. Little. This is your daily Neoclassical TA wrap. We take a look at these markets, doing it from a neoclassical perspective. That means we're looking at supply and demand on the charts. We're using that information that the market gives us to make decisions about trend, about timing, about portfolio management. We're here to educate. That's what we do with the community, as well as provide education through portfolio picks as well. Let's take a look at what happened today. The market was down, but you know what? They couldn't break it down. They tried, they being the sellers, tried to break it down, but did not get the break. That leads me to believe you're going to get some sort of a bounce back up. Gold, silver trades down, as does bonds, and as does most of the market, right? Russell down 3/4, a third on the Nasdaq, and 1/4% on the Dow. S&P down a third. Dollar was the only thing that gained 1/4% on the index. Over in Europe, down as well. Not that bad, 0.5%, but it was a down day there. If we go to the charts, take a look at those. We'll start overseas in Europe. I'm going to start with Switzerland. Switzerland held up the best today of the European equities. Switzerland's had a nice run. ABCD structures on the upside. They came back, did a test last week. Here's that ABCD is completed. Then you've got another one inside that just completed. And then this past week, they got the breakout here on some volume. Now they're fading back into that area. This area looks potentially game if it's going to fade in that deep. And I bring up Switzerland, I bring up Europe first because this week we're going to get Draghi and the ECB telling us what they want to do. If we go to the German market, we see the big spike up last week. That was the day after Trump's speech, fading right back into the bottom of that base. If you look at it, this is the area that you'd expect the buyers to show back up. That's your solid green overlay. That's the strongest support area right now on this time frame. So tomorrow will be a pretty good tell. It looks to me like you'll probably get some sort of a bounce out of this tomorrow. This was the swing point high, the retest region, got up underneath it, spike over it. Starting to get a very jagged market in Europe, just as you see here with Draghi up on Thursday. I think these markets are going to hang and see what he wants to do. If you look at the French CACs, the same thing. You got all the election turmoil going on there in terms of what's coming up, but it is a breakout. Retest regions back at these swing point highs around 49.30. Trying to fade back into that inside day doesn't really tell you much. If you look over in Europe, I mean not Europe, but in Asia, here's the Shanghai hanging at this area. China comes out, says that their economic growth is going to be revised down a little bit. A lot of talk over there still about all the issues that face the Chinese, but you know what, they keep hanging up here. On the weekly, you can see them still going after that swing point high to tag it. I do think, unless something happens, that's probably going to be a failure up there when they finally get to it. If we move over to our markets, ours being the domestic U.S. markets, we can see here that today was a day of push to the downside. They try to close the gap. The gap up off the Trump speech has slowly been taken away. Top of the gap area 2371 trades to 2367, 2368, which also was this high. So you close the gap, you do a doji. This looks like it has the markings. After this little pullback, I'm going to attempt to push it back up again. If you do the ABCD structure, it's really from here. If you want to do it that way, that would point you back up to that area if it actually can break out and get higher. I think it's going to have a hard time. The hard time is going to be off these bars. Actually, this bar, the big black bar, which is this top, and the breakdown bar next to it are actually the a solid red bar, which is a signal of the sellers having the strength there. This to me just looks like, with the fade down, right, on lighter volume, you're going to probably get a bounce out of this tomorrow. If we look over at the other indexes, let's go to the Nasdaq next. The Nasdaq also does the fade. Nasdaq weaker here at the end, fades all the way back in, right? Didn't get as much of a bump, fades all the way back in. Swing point low, not that far away. And what is that? 57.96. We traded as low as 58.27, so it got close to it, but not in it. NDX a little bit stronger, but the index also fades back in and does a little another little doji type trade. And the one that really was trading to the downside was the Russell. But you know what? Even the Russell held. You got this prior swing point high. It's tried to break it down. Today it got up underneath it, back over it, right? Closes in it. That says this one's going to try to bounce as well. So just looking at the indexes, looking at the overseas markets, looks to me like you're going to see a bounce come out of this thing again tomorrow. Question is going to be is do you get a failed bounce? Because if you get the failed bounce, then you can actually get the bigger move to the downside. So just imagine this, some sort of a bounce that takes it back up. I mean, best case would probably be about there if it's going to fail again. And then an ABCD structure to the downside if that's what's going to happen. You finally break out that swing point high and you break into all these swing point highs that are supporting it as it comes back down. So I think that's the worst case kind of scenario is you get a bounce that fails and you take it down. If you don't get as deep, so if we redraw that and say, let's say that you can't get that far back up, let's say that bounce takes you back into that 1396.14 area maybe at best, then the ABCD down is stronger, right? Can take you much deeper, get you closer to all these swing point lows down here. So that's kind of a worst case scenario in a market that's been extremely bullish. If you look at the other indexes, of course, they don't look nearly as difficult in terms of what they're going to do. Best case here probably is a bounce up into this area that might fail, and that would just take you down into the support zone if that's what it is. So it looks to me like bounces tomorrow, and we'll see what they do on the upside. Another day or two bounce, potentially even 1 day bounce, and then potentially a failure to take us deeper finally. Market is wanting to give some back. Got a long way up again. Now it's going to try kind of a blow off type here. We'll see if it can bounce and whether it fails or not, and I believe that will be the tale of the tape. Draghi is on Thursday morning. This market has the Fed coming up next week. The Fed has all but said it is going to raise interest rates. If you look over at the bonds, or where are they at here? The debt instruments. Let me pull those up. You'll see that there was a pretty good sell-off last week in the bonds. A gap down on the recognition that we are going to have the rates going up. It's 3 swing points laying there, 2 more down here. You're right at them, folks. You break this down, break all this support out. If you look at it on a weekly, big consolidation down here at the lows. These typically do tend to move lower. If we bring over the monthly chart and look at it as well, you can see the swing point lows there. If we break it down, this is going to be another leg to the downside, and it could be a big one. And if that doesn't get the market's attention, I'm not sure what will. Big move down to the downside if that's what happens. So we got a lot on our plates here, and we'll see what this market wants to do. I think if you had another big run, I think most of the juice is out of this baby. And now it's just a question of how it holds. Does it come back in price, or does it correct in time? That's it for tonight. Have a great one. I'll see you next time. Good night.